It's a Friday. Let's take a look back at the week on the markets. The week saw the Reserve Bank keep interest rates unchanged, much to the relief of debt-ridden consumers. Consumer price inflation accelerated, though, to 6.3%, roughly in line with market expectations. Economists are saying that inflation could peak towards the end of the year, perhaps forcing the Reserve Bank to hike those interest rates once more.
The bank's latest forecast is for 0% growth in 2016 compared with 0.6% previously.
Announcing no move on interest rates, the Reserve Bank governor said they expected a 0% growth for 2016, but the bank has not ruled out hikes later this year. The bank's statement came after data showed inflation continued to stay outside the bank's upper target band of between 3 to 6%. This as the impact of the drought on food prices persists. Inflation for June stood at 6.3%, up from the 6.1% recorded in May.
In the second half of this year, I think we should expect further modest increases in inflation, mainly because in the second half of last year, petrol prices fell very sharply. So we don't expect them to fall quite as sharply in the second half of this year, and so the petrol inflation rate is set to rise in the second half of this year. And also there could be still some knock-on effects from the drought in terms of higher food inflation.
At the same time, the Bureau for Economic Research's Inflation Expectation Survey put average inflation expectation at 6.1% for the second quarter. Average household inflation expectations declined from 6.4% to 6.2%. The European Central Bank also kept their rates on hold this week. The rand strengthened yesterday, closing at 14.23 against the dollar compared to Wednesday's 14.35. This as it's expected interest rates would remain high this year. The rand traded at 14.22 against the dollar at midday. Stats SA will next week release the producer price index and the quarterly labor force survey results for the second quarter. Claudius Fakomosi, SABC News, Johannesburg.